Good morning and welcome. It's that time once again, the Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group. In the warming valley of the sun, I hope this finds you well. I woke up this morning. That beats the alternative. Our toll-free number, 800-951-0592. The website at allamericangold.com. I don't know what it's, I've been watching that volcano now. We know about the one in Hawaii. Now there's another one in South America. It's just weird. I don't like it. And you know what? The more you read, the more you don't like. They said something like 500 earthquakes around the volcano in Hawaii. And you always hate it when, you think about, I was reading where the scientists, so there's people out there that have dedicated their life to volcanoes, right? Me, I've dedicated my life to gold. Somebody else to volcanoes. And when you read that they're stumped by the way the volcano is looking, right? Somehow they can obviously they've studied all these volcanoes, and based on lava flows and this and that and the other, they make these predictions. And apparently this volcano is doing something that they, I guess, haven't seen before. They don't know if it's a good thing or a bad thing. I'm going to go with, I don't know, but my guess would be it's probably not a good thing. Just saying, that I hope I'm wrong, but it just seems like we're having a lot of activity lately, and it makes me nervous. Really makes me nervous when, how many people, I'm going to grow up and study volcanoes, and then this volcano's not acting right. Maybe we can give it a Xanax and it'll be all better. I don't know, but anyway, I just thought I read. Sometimes you read too much, and I think this time I did. I actually scared myself. What? I'm curious about that. I like to read, all kinds of different stuff, and I was reading about the volcano, and I thought it was getting better, but then I started reading, and they're like, well, you know what? It's doing something that we haven't seen before, and then it just, I don't know, got me worried about it, but with all the things that are happening in the world, what's a couple of volcanoes to worry about? 800-951-0592 is the toll-free number. It's etched in your brain, the physical delivery of wealth insurance, something everybody, especially if you live in Italy now, you may want to have some Italian bonios. I know, right? We're talking about them again. You know what is so funny is I think back, remember when we used to talk about Greece all the time? And we talk about Cyprus all the time. It seems like every day. They're still striking in Greece, just so you know, right? The people there are still in austerity. Let's not forget it. But the Italian bond yields blowing out again, has the Dow down this morning about 75 points. Gold's up $4 as, again, people are worried about debt. And I say people, banks right now, all the Italian banks are under fire, right, which also means that the French banks and the German banks and the English banks are all under pressure again this morning. And Italy's prime minister gave a speech in which I guess they are continuing down the path that the European Union and, of course, the U.S. Central Bank doesn't like. Right? I'll call it another one of these countries that is, turning its back on the central banks. And we're starting to see a lot of it. We're seeing all of these countries stockpile gold and bring gold home and doing really interesting things. And we're seeing countries now ignore the United States when it comes to sanctions on this country or that country or this company or that company, and seemingly walking away from the dollar And of course, the funny thing is the dollar's actually stronger again today because remember they measure it in a basket of currency, so the euro's down, but it's not one of those big strength things. We'll have to keep our eye on it because the market's kind of flopped today. Gold was pretty quiet. The Dow was higher. Everybody was excited, and then of course the Italian bond yields broke down again this morning. And it's a debt problem. It's always been a debt problem. We can't, quote, unquote, grow our way out of it. But we did have some good numbers here at home, some survey numbers. Job openings, I want to say I don't know if it was an all-time high, but it was definitely the highest we've seen this millennium. The amount of jobs opening, record high in April, record high. They now say there's more jobs openings than there are people unemployed. So could you imagine? Maybe we could have a negative unemployment rate. The problem, I think, is the type of job that's opening. But they said 6.7 million jobs, according to the Labor Department, the best ever in the last 18 years. So I don't know if that means it is the best ever or not, but it said the best ever in the last 18 years. There is more openings for durable good manufacturing and information sectors, but decreases in finance and insurance. And the quits kind of stayed at a pretty high level. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. That is our toll-free number. Big article out today about gold leaving the United States in fast, according to the latest data. Of course, we know Turkey now the latest country pulling 220 metric tons out of the United States Federal Reserve System. They did that in April, which is about $25 billion. Of course, not the only ones doing it. The following, here's a list of countries now pulling gold out of U.S. vaults: Germany, Netherlands, Austria, Belgium, Russia, China, Azerbaijan, if I'm saying that one right. Yeah, try to say that 10 times fast. In recent weeks now, you're hearing more and more countries, and you're going to see this now. Part of what's happening, it's happening to Italy today. It's going to keep happening to Italy. And remember the list. We already know the list. Portugal, Ireland, Italy, Greece, Spain, right? They're all going to have it. On top of, right, countries like Venezuela, Argentina, Turkey, India, Mexico, the peso today getting blown out. You got to really pay attention to what is happening out there. And in the case of Turkey, one of the things they're starting to talk about with gold, this was the Turkish president, with gold, there's no political allegiance. Gold makes a lot of countries comfortable as a holding, especially if they fear inflation. Many countries prefer to hold their own gold. Although Turkey has received the most attention, right? Let's not forget, Germany's moved now, man, it's incredible how much gold they've moved. 674 metric tons of gold back from the United States and France. They said the bank also reportedly moved another 940 metric tons out of England. So, you start thinking about, right, Germany's transferred almost now 2,000 metric tons. What is the motivation, right? And I keep saying this. Why is this happening? And as we kind of watch all of this play out, I think the picture's getting a lot clearer. Many people don't trust U.S. Treasuries claims that it currently holds 8,100 metric tons. Of course, in Fort Knox and the other, West Point has some, Denver has some. They worry U.S. official gold reserves have not been fully audited and accounted for. Thus, they fear and feel safer withdrawing their gold, right? Which just makes sense. Really, when you think about it, do you want to take somebody, well, it's there, don't worry, take my word for it. Well, if you're not willing to actually count it, you know what? No thanks, I won't. I think that's a part of it. But that gold's been there for almost 90-some years in the case of Germany. So there's something else besides the fact that it hasn't been audited, right? I don't think that's the biggest factor in all of this. What is really happening is the countries wanting to have their reserves in something other than the dollar. If you're one of these emerging market countries, they're getting hit hard right now, right? We know the list, right? Turkey's on that list, India's on that list, Argentina's on that list, Mexico's on that list. They're getting hit hard by this run in the dollar here, right? The fact that interest rates are rising, the amount of debt that the United States needs to finance is soaking up all the dollars, right? Because there's so much dollar debt out there, and these countries are getting hit. One of the ways that they know they can defend themselves is by stocking up on gold. Then the next one, tariffs. Right? We've heard all of the trade wars now. Matter of fact, part of what happened today in Mexico was they've responded and now are going to impose tariffs on United States goods, which is now hurting their country. Tariffs are now leading many nations to move away from the dollar. Listen, this is happening, right? And right now, Wall Street doesn't care. Hey, that's high-level stuff, right? They'll care about it later, but we need to care about it right now. We know that Russia and China are building their gold reserves. We actually, think about this. We probably haven't seen countries trying to build their gold reserves since like the 15 and 1600s, right? We're sending Columbus out there and all of these countries are trying to get all the gold they can and all that. So we haven't seen it since then. Now it's happening all over again. They're trying in an effort to create a gold-backed currency. I see this a lot. I don't know. It makes sense to me, right? They want a currency that they don't have to have the pressure of holding U.S. dollars. They don't want to be dictated. One of the reasons, hey, Joe, why don't you get a sponsor? Right, we go out and get a sponsor. Absolutely, we could. But then they can start telling me what I could say. Right? It's like when you turn on the idiot box, why is it that all the stock channels got cheerleaders up and down the dial? Well, because it's real simple. The people that are paying for the airtime, they don't want them saying negative stuff out there. And this is the same principle here. These countries don't want to be dictated to. Eventually, it's funny, we talk about we want it back. I love the tariff. The fact that we agreed to these ridiculous trade policies that have meant that the United States hasn't run a single trade surplus since the early 70s is ridiculous. Anybody who would argue otherwise, that's a different agenda. right? And the agenda really isn't about America. The agenda is, right, global new world order, one world currency, right? The bankers, they hate borders. They do. And what you're seeing, though, is eventually you'll want it all back. And these countries, it's the same thing. We want our sovereignty back. And clearly one of the ways that these countries are decided that they can get it is by getting rid of dollars, right? Because what are they using to buy all this gold? Right? What did Turkey use to buy all this gold? They used dollars, right? The Russians used dollars, right? They wanted out of the dollar. Part of it because, right, they know, right, debts are unpayable. Part of it is because I think every country in the world is kind of going through the same thing we are. Everybody wants it back. The Italians, why are their bonds getting crushed? Because the Italians are like, you know what, maybe this EU thing wasn't such a great idea for us after all. Right? They're trying to do the same thing of we want to print more money. But the EU won't let us. And so now the whole world is heading down the same path. And remember what I told you. They didn't fix it. It didn't go away. It was just hidden under a bunch of newspapers, really just hidden under a bunch of dollars. And now all of the rest of the world, and I know we're sitting there and we're talking about, hey, we could have GDP of 3%. Wouldn't that be so? And it's funny how now in our minds 3% is some mythical creature out there that's going to give us nirvana. It's not. And now we're starting to see all these little cracks, kind of like that volcano in Hawaii where the scientists are like, you know what, it's not acting right. That's what's happening now. Right? Wall Street, they try not to focus on it. But it's happening. Right? Italy's not acting right. Portugal, not acting right. Spain, it's not acting right. Turkey, Russia, China, right? It's a much different place out there. And you remember a few weeks ago when we talked about the London Metals Exchange, where the gold price gets set, and how they're quickly getting ready to launch all of the metals contracts in Chinese renminbi. Don't underestimate the importance of what is happening. And we see Germany cozying up to China now. And obviously, right, we know Iran, we know that Turkey, right, a lot of the African nations, Russia, right, they've cozied up to them. But now we're seeing other countries that were typically what we thought to be our allies. You know what? I had this thought, and pardon the reference if you're not a sports person. The Cardinals, the Arizona Cardinals, we had a player, Tyrann Mathieu, right? They call him the Honey Badger. And we paid him a bunch of money a couple of years ago. And he got hurt, and then the next year he didn't play so great. And the Cardinals wanted to renegotiate his contract, okay? In other words, hey, you know what? We paid you too much. So we want you to take less, okay? Tyrann Mathieu didn't want to take less, right? It's kind of like Mexico, Canada, Germany, right? Nobody wants to take less. Nobody wants to redo the trade. We got a contract. We got a trade contract with the United States. We don't want to take less. Here's what happened. The Cardinals were still offering Tyrann Mathieu more money than anybody else. And they were willing to do it for multiple years. He turns it down and signs a one-year deal with another team. Now, financially, who would do that? Right? He threw away millions of dollars, but he was mad. He was upset at the Cardinals. So he wanted to leave. And this is kind of what's happening with all of these countries. Mexico's upset, Canada's upset, Germany's upset, France is upset, China's upset, everybody's upset. Even if we still have the best offer on the table, right? They're all like, no, we're done with you guys. And this is happening all over the place. The whole world, they're upset, and guess what? Every time this happens now, what do? Let's buy some more gold. Let's start putting more gold away. Because you know what? We're upset. Yep, I know it's still, you know what? We're still better off doing business with you. But we're going to put the pieces in place to where we don't have to, right? Because what did Tyrann Mathieu do? He signed a one-year deal. He's hoping, hey, if I play like a superstar this year, I'll get paid a boatload and I'll be better off. That's what these people are doing. This is what these countries are doing. You don't see it. They don't talk about it enough. They don't want you to focus in on that. Right? They want you to keep, we fixed it. Listen, we're running $1 trillion. I hope we can get 3% growth with a $1 trillion deficit. But pay attention to what the rest of the world is doing and why they're doing it. Patriot Radio News Hour, halftime on a Tuesday.
This is the Phyllis Schlafly Report, a daily broadcast from Phyllis Schlafly Eagles, and we're upholding the legacy of Phyllis Schlafly, a constitutional attorney and articulate voice for traditional values for more than 70 years. Now, here's the president of Phyllis Schlafly Eagles, Ed Martin.
In case anyone needed a reminder why grassroots conservatives support Donald Trump, the divide in the GOP over Trump's so-called travel ban is conclusive evidence. A group including prominent Republicans from 10, 20, and even 30 years ago, including former New Jersey Governors Tom Kean and Christie Todd Whitman, as well as failed Utah candidate Evan McMullin, were among those at the U.S. Supreme Court in April who were asking that the latest vetting standards of Donald Trump be blocked. The insiders' control of the GOP may have eroded, but these filings by Republicans in the past only show that the establishment is still fighting back. Time and time again, from as far away places as the federal district court in Hawaii, activist judges have blocked Donald Trump's new travel restrictions. Hawaii, of course, sees little harm from illegal aliens because so few can travel there, and California already benefits from a southern fence to stem the flow of illegal migration from Mexico. President Trump acted properly to suspend, temporarily, migration from North Korea, Syria, Iran, Libya, Venezuela, Somalia, and Yemen. Yet the resistance to Trump's protection of our country against foreigners continues to be intense, as the briefs filed in the Supreme Court opposing Trump far outnumber those in support. Even a group of former national security and so-called intelligence officials asked the Supreme Court to strike down Trump's travel ban, despite how it obviously enhances our security by keeping potential enemies out. Andrew C. McCarthy, a former prosecutor of terrorists, filed a brief in support of Trump's position. At the end of the day, McCarthy points out, it is not the role of the judiciary to intercede in such matters, and this court should clearly say so. 14 states, including immigrant-popular Texas and Arizona, weighed in with the Supreme Court to support President Trump's travel ban. The court should listen to these states that are on the front lines of illegal migration into our country and to the grassroots that support Donald Trump.
This has been the Phyllis Schlafly Report with Ed Martin, president of Phyllis Schlafly Eagles. And we think it's time to take Washington back from the power brokers. At phyllisschlafly.com, we're organizing a grassroots movement to stand against the deep state bureaucrats who control government. For the latest strategies, go to phyllisschlafly.com. That's phyllisschlafly.com. Thanks for listening, and join us again next time for the Phyllis Schlafly Report.
Welcome back, 800-951-0592. Gold's reclaimed 1,300. Right now, gold's up 7. Silver is up a dozen, $16.55. I've got 30, I know, I wish it was more, 30 $20 gold pieces, $13.55. You buy 10 or more, $13.50. $50 over spot. I mean, you just can't beat that. I've got on the silver side, I've got 50 rolls of dimes still left. 50 rolls of dimes, still doing them at $65, which still puts it, what, $18? That's $18.18 an ounce, which is, what, $1.63 still over spot. Put them away. Listen, don't allow this pullback here in gold to go by without adding. Even if it's one coin, add to your portfolio. Let me tell you what Bridgewater said yesterday. By the way, that's Ray Dalio's company, another one of the guys I love. 2019, setting up to be a dangerous year as fiscal stimulus rolls off while the impact of the Fed tightening will be peaking. And that's a very key statement. Yesterday, India's central bank, another country that said, hey, you know what, now we're ignoring the Iran sanctions. Their central bank head warned that unless the Federal Reserve ends its balance sheet reduction program, right? Again, they're just going to, hey, you know what? Don't worry, we're just going to roll off just a little bit. It's going to be seamless. Nobody's going to even notice. Guess what? People are noticing, and it's causing huge problems. It hasn't come here yet. But as Bridgewater said, 2019 is going to be dangerous. They said at a time, this was India's central bank yesterday, calling for the United States Federal Reserve to end reducing their balance sheet. We're never going to get rid of this stuff. Says that the Treasury and the central bank are soaking up dollar liquidity. In other words, there's so much of dollars needing to be spent just to buy the debt, it's suffocating the world. And they want the central bank, our Federal Reserve, to stop selling their treasuries because the world can't take it. And it says that the dollar liquidity is being dried up by some substantial amounts of U.S. debt to fund the Trump budget. It's only going to get worse. I got news for India's central bank. This is still a good deficit number. Wait another 3 years. Wait another 5 years. Wait another 10 years and see what happens. Tightening in financial conditions will lead to global conflagration. I can't even say that word. Started by the emerging markets. You know, and I'll tell you this. I talk to Eric all the time. We actually talked this morning, and he goes, "We're going to war." He says, "I don't know which country's going to start it." And he said, maybe it's Iran, maybe it's somebody else, but we're going to go to war over all the financial chaos that's coming. Back to so that was India calling on the Federal Reserve to stop with its balance sheet reduction program because it's soaking up too many dollars. There's not enough. It's causing huge turmoil in a lot of these emerging markets. Bridgewater continues. For investors, the danger's already here. I agree. There's a reason for all this market craziness. You know it. I know it. I know Wall Street always wants the best outcome. They always think that's what they're going to get. We're not going to get it. And why? I don't say that to scare or anything else. Look at what they did. Come on. Right? You can't create trillions and trillions and trillions and trillions of dollars worth of debt and seemingly somehow, we're just going to start getting rid of this. It'll be fine. We know it won't be. They know it won't be. Markets are already vulnerable. The Fed is pulling back liquidity and raising rates, making cash scarcer, reversing the easy liquidity and the 0% cash rate that help push money out of the risk curve. It's all going to go back. Right? And we talk about this a lot. They created all of this money. And with zero rates, people were out there, what? Buy the debt. Well, rates aren't zero anymore. Now people are starting to pay attention to risk again. And when all of that money's going to have to go somewhere. And this is what Bridgewater's talking about. The danger to assets from the shift in liquidity and the building late cycle dynamics, right? In other words, talking about the debt cycle here, Wall Street and all this. We're at the end of the cycle, right? And this is why seemingly almost every day there's 100 plus, 200 plus, 300 plus, 400 plus moves on Wall Street. Compounded by the fact that financial assets are pricing in Goldilocks. And all this debt we have, it's fine. Yeah, it's good. Yeah, don't worry, right? We got mortgages, we got car loans, we got credit cards, we got sovereign debt, we got Italy debt, we got Spanish debt. It's all good. With little chance of either a slump or overheating as the Fed continues its tightening cycle over the next year to year and a half. So Bridgewater saying it's all going to come to an end, that the world's pricing of Goldilocks will not end well. The yield curve, which is totally flat right now, right? And of course, that always is an indication of the bond yield curve. The flatter it gets means the closer we are. The flatter it gets, the closer we are. Patriot Radio News Hour. We're going to finish up with Bridgewater when we return. I know. Well, you sit on your hands. You want to believe the Goldilocks. I'm telling you, everything's overpriced. You know it. Housing's overpriced. Right, we're getting back to the same stuff that we saw like in 2005. 30%, 40%, 50%, now 60% of all housing markets are overvalued, right? We've seen this before, right? People are starting to default on the credit cards and the autos, and yet, the jobs market, it's the greatest jobs market of all time if you want to work part-time. Don't take my word for it. I want you to pay attention. Listen to what these guys are saying. And when I say these guys, right, this largest hedge fund in the world, this is where the billionaires put their money, with these guys. Bond yields are not priced to rise much more. Matter of fact, nobody, despite these quote-unquote strong conditions, calls for any further Fed tightening and no further tightening beyond 2019. Not a single person. Right? Everyone's like, well, they're going to be done this year, maybe one or two, maybe a couple in 2019, but that's it. And here's what they said. Right? They don't disagree. We agree. We don't see them raising any more either. When I say any more, beyond what we've talked about, somewhere between this 2% to 2.5%, that's it. This seems to imply an unsustainable set of conditions. In other words, they're saying this can't last. Given the government deficits are going to continue to grow year after year, well past the, quote, peak of fiscal stimulation, and the Fed is scheduled to continue to unwind its balance sheet. So here's Bridgewater saying, the rate hike cycle is about over. But yet, record amounts of U.S. debt continue to come onto the market. Oh, yeah, the Federal Reserve's continuing to try to lower its balance sheet. It's difficult to imagine attracting a sufficient amount of bond buyers with the yield curve continuing to flatten. We are bearish on financial assets. This is a direct quote. And as the U.S. economy progresses towards the late cycle, liquidity has been removed. The markets are pricing in a continuation of recent conditions despite the changing backdrop. We are bearish. In other words, what they said is, hey, what the market's doing right now doesn't add up. Doesn't make sense to them. Not enough bond buyers for the amount of debt you want to sell at the rate you want to sell it at. Right? Hey, you guys don't want to really pay a whole lot more than 3%, and we know how much debt is coming onto the market. There's not going to be enough buyers. So when they talk about financial assets, what are they talking about, right? They're talking about debt. They don't care what kind. Emerging market debt, right? United States debt, stock markets, this, that. It doesn't matter to them. They've laid out a very simple, easy to understand explanation. The markets are pricing in Goldilocks, but what we see is an unsustainable, illogical situation today. The Federal Reserve doesn't want to raise rates much higher. When they don't, we know that. I think they'll raise next week. I think we'll get one more this year, and I'm not so sure about. I'm like with Bridgewater. I'm not even sure about 2019. But one of the things that they made very clear was the amount of debt the United States is going to continue to need to sell is going to continue to cause less and less people to show up to the bond market. It's okay to be a little early. You can't be even a day late. The U.S. $20 gold pieces. We just had gold, up again, back up at $1,300. That's nothing. $1,300 doesn't even matter. Even if it was down, flat, it doesn't matter. You have to understand what it is all of these countries are getting ready for. Right? And you need, how many times did Eric and I always use you need to be your own central bank. This is what's coming. It's a tsunami of debt. Every country has it, and they're being strangled by it, and now the United States is causing all of the liquidity to dry up because so much money has to go just to keep the lights on. Bridgewater says that's not going to continue 800-951-0592. U.S. 20s, 1355, 10 or more, 1350. Final segment coming up. 800-951-0592. That is our toll-free number. Again, U.S. $20 gold pieces. Best buy around. 1355. You buy 10 or more, 1350. There's 30 of those available. And actually, technically, there's 34 because I got 4 here. 30 of them available at 800-951-0592. As we've been talking about, just not a lot of stuff available like there was at the beginning of the year, like there was last year. Silver, every day we call now, and it's just not out there. Rolls of U.S. Silver Eagles are $3.95. That's why the dimes are such a better buy. I mean, you're talking about, what, $1? I'm trying to do math in my head. $1.58 an ounce less when you buy the dimes versus buying the Silver Eagles. By the way, silver dimes, I know Colorado is still waiting for theirs. Those have shipped. They're on their way up to Colorado today. We'll be all caught up here today as well. All the Indians are going to be landing here in the next about 35 minutes. And those of you waiting for pickups, we'll be giving you a shout. The rest of you, we will be shipping today as well. 800-951-0592. The story of the day, Italian bond yields. Italy's prime minister has now come back out and says that Italy does not want to leave the euro, but it wants to renegotiate. Right? They're doing the Trump thing. We want to renegotiate. We'll see how that pans out, because here's the problem. If Italy does it, right, then Portugal's going to want to do it, Spain's going to want to do it, Ireland's going to want to do it, and we kind of know how that's all going to work out. Again, though, the big piece of news here, Bridgewater out with a big note today saying, hey, this doesn't add up to us. The United States has record levels of debt that it needs to sell. And you cannot expect to sell it if the yields are not going to rise and rise significantly like people are saying. Right? If the Fed truly isn't going to raise rates again after 2019, there's no hope. And, of course, India's central bank today calling on the United States Central Bank to stop selling their balance sheet because it's causing the rest of the world a bunch of heartburn. Go figure. Right? I told you, we're not going to be able to get out of this without there being repercussions for what you did. Eventually, you have to pay the piper. Right? And they keep trying to act like we're not going to have to pay. We're going to be paying. 800-951-0592. That is our toll-free number. Tomorrow, I may or may not be here. We may have Jason or Glenn or both of them possibly filling in for me. I have a funeral that I need to go to that starts at 11. And it's not in town. So be ready for that. But they'll do a great job in my place. And then I'll be back again on Thursday. 800-951-0592. Be your own central bank. Heed the warning. You'll be glad you did. Take care. Have a great rest of your Tuesday.